Good morning and welcome everyone to Moneycontrol live stream. You're watching the opening bell and I'm your host Nickey Mirchandani. Indian stock market indices set to consolidate after recent correction. RIL earnings and HDFC Bank's recovery, of course, will be eyed. Of course, we're going to be looking in the trend, at least at GIFT Nifty indicates a flat start coming in for Indian equity markets with a gain of 7 points. US stocks have ended in higher on Thursday with S&P perhaps approaching the record high level. It is the AI optimism which has drove the gains in Nvidia and other chip makers, and Asian markets also bounced on Friday, buoyed by a rally in regional capital chip makers. Along with that, we are also looking at FII data. Well, the numbers aren't really encouraging. Sell-off worth around 9,900 crore. DIIs have been supporting the market, foreign equities to an extent of 5,977 odd crore. But, well, I'm back and so are the markets. Big recovery coming in for Nifty 50. We're looking at gains to an extent of 3/4%, thereabouts, 21,600 mark. A bit of relief which has finally come through for the markets after the sort of drubbing that we've seen thus far over the last couple of days. Bank Nifty, that's the one which really you need to watch out for. It is up with gains to an extent of 1%. Thereabouts, it's nearing to that level. Right now, it's a little over 3/4%. Essentially, some amount of support which has crept in from IndusInd Bank. RIL will be reporting in the numbers. Pull up RIL and HDFC Bank. Of course, these are the two essential heavyweights which are setting the tone right for the markets. Reliance up now, and do bear in mind the fact that it's going to be reporting in the numbers today. And HDFC Bank, let's pull that up after the sharp amount of dropping that we've seen. Some solace finally creeping in for HDFC Bank. Pull up top gainers and the top losers before we navigate our conversation to Shivangi out there. But top gainers and top losers out there, just to see how the trend has been stacking up. Kotak Mahindra, Wipro and Coal India. These are some of the top gainers that we have. Axis Bank, Bajaj Finance and ICICI Bank. These are some of the other top gainers that we have. Let's look at the top losers just to see where essentially the losses have come in from. Well, IndusInd Bank is trading lower. That's a bit of a surprise there because the margins have been positive. They've been stable rather. That's a bit positive coming in for IndusInd Bank. But do bear in mind the fact that it's not typically a heavyweight. HDFC Bank is the one where the bearing essentially, or let's just say the uptrend is coming in from. Shivangi Sharda, the analyst and the equity derivatives at and technicals at Motilal Oswal Financial Services joins us. Shivangi, good morning. How are you doing? It is a good start to the day. We're looking at gains to an extent of 3/4% thereabouts. What do you make out of the start, A? And what's your view coming in on HDFC Bank?
Good morning, Nickey. Thanks for having me on the show. So we've seen that there has been, a cool off in the last 3 days because of the rally that we've seen in the last 10 weeks. So this correction was quite normal. Of course, it was accelerated by the heavyweights and everything, the results coming in. But then again, we've seen that there has been good support-based buying in Nifty around, 21,250 odd levels. So this is a crucial level. We've seen that, indices have opened gap up today and are sustaining at higher zones. So 21,500 would be important support to watch out for. Stock specific action is quite strong. So intraday, we are recommending that buy on decline strategy will work. This is a small bounce, but if it holds above 21,500, it will kind of see momentum towards 21,850 odd levels. Now, talking about Bank Nifty, there's clear underperformance seen over here. Lack of momentum and follow-up buying can be seen over here. But then again, we've opened a little positive. We are holding at those levels, but then consolidation cannot be ruled out because of the stagnant, movement in some of the PSU banks as well. So over here, 46,000 would be a very crucial support, very crucial level to watch out for. This would, be a make or break at these levels. And upside, we are looking at, 46,400 levels. And for the support, we can look at, 45,750 levels.
All right, Shivangi, I'm also going to be addressing in RIL and the earning expectation that we have from RIL. At least the top line, we're expecting a 6% growth thereabouts. Bottom line, a 7% uptick. And the EBITDA performance also is expected to be higher by 14%. Essentially, the divisions that are expected to do well is exploration and production, and oil to chemical business is expected to, however, witness a decline on account of product cracks and lower realization. So, view coming in on this one, Shivangi, that's one that I'd like to ask. And of course, HDFC Bank, well, FII's darling, which has not turned out to be that way, at least for the last two sessions. What's the update on there? Do you suggest a buy on dips, or rather buy even at the recovery level that we've seen for HDFC Bank?
Talking about the heavyweight banking stock, HDFC Bank has seen sort of a momentum getting lost, and we've seen that somewhere even at the support zone, buying is not that strong. There has been quite a lot of shorts which have been made at these levels as well. So considering the overall chart structure of even the bank Nifty and the data setup, we've seen that the put call ratio is quite stagnant. So which is at levels where call writers are having more grip right now in the market for bank Nifty. So considering that situation, we are looking at a little more consolidation at HDFC Bank as well. Levels per se, if we talk about the immediate support is coming out to be around 1485 levels, and the upside immediately we could see levels of around 1530 levels. So this is my take on HDFC Bank. Reliance, we are seeing that there has been some sort of a recovery over here as well, of course in line with the broader market. And the good part is that it is holding on to its higher zones. And even despite the market weakness in the last three trading sessions, this stock is not seen such a big hit. And there has been strong buying in the second half of the session yesterday. So this clearly indicates that the buying will continue. There is some softness in the opening zone, of course. But then, if it halts around these levels, we could see higher zones over here to the level of the recent uptick, which is around 2800 levels.
Okay. Also, what I want to understand is your risk-reward ratio, at least from the chart perspective, for Polycab and for IndusInd Bank, because some amount of solace has crept in from IndusInd Bank, not really reflecting on the numbers right now. But Bank Nifty, of course, it's not even a heavyweight to particularly propel the sentiment, but good set of numbers. Polycab is another one which is reported in the numbers.
So looking at Polycab, of course, we've seen that last week was a very big movement in this stock, and we've seen that although some sort of recovery is seen around 4,000 odd levels. But then again, on the daily structure, the chart is seeing a lot of volatility. Now, talking about the intraday perspective, this stock could see a bit of a more consolidation over here. But I would suggest we could wait and watch. And if there are any fresh positions to be taken, we could definitely wait and look at better sectors which are actually more in momentum and better stocks. So I would suggest to stay away right now.
All right, Shivangi, we'll just gonna leave it at that. And thank you so much for taking out the time and having this conversation with us right now. All right, let's navigate our conversation to a very, very special guest on the show. And of course, also my favorite, Andrew Holland, who's the CEO, Avendus Capital Markets and Alternate Strategies. Morning there. How are you doing, Andrew? It's a pleasure always to see you on screen. But your initial assessment of the kind of correction that we've seen through for the markets, perhaps bit of a panic, test there for the markets. Do you think it was a temporary blip that we saw, some amount of recovery that came in thereafter, and the sharp dropping that came through for HDFC Bank?
Well, first of all, good morning, Nickey, and thank you for the opportunity. Pleasure. As always. So, let's put it into context. The market's probably where it was when we started at the beginning of the year, maybe just 0.5% down for the month. So it's not a disaster, right? I just think we came in with that Goldilocks scenario from a global perspective, from an India perspective, and something changes, always does, to just kind of take us back to reality. And, a number of factors have. Obviously, the expectations are that interest rates may not fall as quickly in the US. Inflation's still sticky, jobs still sticky, and of course, whilst we started off the results season with optimism from the IT sector, unfortunately the HDFC Bank results had that kind of enduring worry. Then is it just their problem, or is the whole banking sector problem? And I think the jury's still out there, Nickey. I think we'll have to wait to see how Kotak, ICICI, Axis. Is it the same problem for them? And if not, it's just a one-off for HDFC Bank, and then we can move forward. But if it is the case that they're facing the same problems, then we'll probably test those lows again, I think, very quickly on Monday.
The real question I think most of us would be wanting to ask is, the much admired sectors, let's just say financials for the matter, is it like you said, the jury is still out there to decide whether it's just one-off problem for HDFC Bank or an ICICI and SBI will also dictate the trend going forward? IT was neglected thus far. It managed to outperform, or rather just managed to deliver some amount of surprise. Sure, LTI Mindtree saw some huge correction after the numbers. Oracle saw a bit uptick. So dichotomy of trend typically has played out for IT sector. What's your assessment for IT sectors? And of course, the neglected sector, do you think they'll make a comeback in a big way? Also, are we looking, by virtue of that, are we also looking at pharma space right now?
Yeah, so in terms of IT, I think what the market's saying is, basically probably towards the bottom of the problem in terms of earnings growth, and therefore going forward, you'll start to see a pickup in the kind of orders, throughout 2024, probably in the second half of the year, and that's based on the fact that interest rates will be falling in the US, and you will get the technology kind of tailwind to help the stock prices as the orders start to come through. So that's what the market's banking on there in terms of the IT sector. It's something we talked about before, Nick. Do you buy ahead of an interest rate cut, or just sit and wait to see if the earnings will start to improve? And I think that's what the market likes, is that we've bottomed out, interest rates are going to fall, so therefore this sector, which as you said has been unloved, is now loved again against other sectors. As regards pharma, I think again you have to be very selective. It's a good place to hide when your markets are falling. And I think, again, it would probably come to our attention if the results of the banks over the weekend are not so good. But if the banks, if the other banks are doing well, then that could be the trigger again for the market to kind of consolidate around here. I don't think the market's going to move too much higher in the short term unless those banking results are absolutely stellar.
Okay, so are you technically saying that you perhaps are seeing some more pain coming in for Indian equity markets, at least in the run-up of interim budget? Have I got that right?
Yeah, I think it's going to be, the volatility is going to be there. I said, Nickey, we came into the year with the Goldilocks scenario globally and locally, and I think that Goldilocks scenario has just been tarred a little bit by what's been happening, and that's not a bad thing. Listen, our market's hardly down since the beginning of the year. So if we consolidate around here, get through the results season, and obviously then move towards the elections, I could see the market moving higher. But I think that consolidation without the euphoria, I think, is what I'm looking for at the moment.
How has the Q3 earnings essentially stacked out for you until now? We've seen mix of some companies reporting numbers, majorly for banks and IT. There is a bit of dichotomy, as we've just mentioned. But what do you think in this season would you be keenly eyeing for? I mean, the sectors that you think are going to be the bets that perhaps could manage to deliver a surprise on the upside for the markets, which could be a game changer of sorts for the equity markets?
You see, Nickey, I don't think, I said, unless you see some stellar results now from the banks, which has a huge weightage on Nifty, it's going to be difficult for any other sector kind of to have that move for the Nifty. And that's why we're saying that, this year we expect earnings growth to be up by around 15%. I mean, I think the market will probably rise by a similar amount over the coming year. So it's not it's not going to be driven by the banking sector in the short term, is my belief. Therefore, the themes that we talked about before, which is defense, renewable energy, holidays and travel and hotels, I think these are the kind of sectors which are going to deliver stellar results, and that's where you're going to see the uplift in earnings. And I think any company that does well in earnings now, I think you'll see a re-rating of the stock. And I think so it's more individual companies within sectors. I think the auto stocks also could be quite an interesting play. We'll see what Tesla does, but that could be good for the auto component companies. So those, there's themes around what we're saying, but it doesn't, unless the banking sector really kind of helps Nifty, I can't see us moving that much higher in the short term.
Okay, Andrew, if one was supposed to get into the markets at this point with some amount of correction which has already come through, what's your suggestion? Would you expect what's your suggestion? Would you want the investors to perhaps be on the sidelines, wait for the budget perhaps to stack up and then enter the markets? If that's not the view, what kind of portfolio allocation can we look at, say for an IT, say for banks, for pharma, even the neglected sectors, something like a media has also made a big comeback, and also, metal sector for that matter. People weren't really talking about it through and through for the last 1 year. But this year, the narrative has changed and these stocks have really done well. So if you were supposed to A, advise the strategy on how to play the markets, that's one. And B, the kind of percent allocation that they can be looking at for their portfolios.
Yeah, so I think, I mean, obviously it takes into account a longer term view. But that said, I would, if I was putting 100 rupees into the market now, I think 80% of it would be towards large caps. And I would have to put towards IT, banking, and the metal stocks, because those are the sectors which I think will drive the index higher going forward. There might be these kind of turbulent kind of downturns here and there, but I think those are the three sectors which I see really propelling the market higher. Obviously, we'll see what Reliance results are like, if they're good, or there's expectations of kind of IPOs of some of the businesses. That might be a catalyst as well for that stock. So those are the three main sectors. I think metals could be the interesting one, because we're still waiting for China to fire that big bazooka to get this economy firing, and if it does, then obviously commodities and metals will be the ones which will be the beneficiaries. So that's why I think metals will do well. And then the balance of 20% will be between mid caps and small caps in the themes that I've just mentioned: defense, renewables, electronic manufacturing companies, beverages, which is a favorite of mine, and hotels and travel.
I want to chat about HDFC Bank a little bit more in detail, because some amount of felt destruction clearly has come through for HDFC Bank, at least for the last 2 days. Investors have lost in more than 1.45 lakh crore with the kind of drubbing that has come through. FIIs have sold off HDFC Bank. The hopes were, of course, FIIs, which were supposed to come back in a big way, will first tap into the financial, and HDFC being just at the top of the stack will be the obvious beneficiary. But that's something which narrative has been thrown off with the kind of results that have come through. How are you looking at the bank right now?
So I think generally I've now moved away from thinking about HDFC in the short term, because we're going to have to wait another quarter. We're going to have to see what if they're going to try and increase their deposits by raising the amount of interest to attract more customers, which obviously put more pressure on NIMs. So I'm really focused now, Nickey, to be honest, on what the other big banks, the Kotak, ICICI, and Axis now have to say, because I think they'll be the drivers of what we're thinking about the banking sector. Because if it's, as I said, if it's a one-off with just HDFC Bank, that's great. But if it's more systemic around the whole banking system, then there's there's a bit of pain more to come for the sector. And of course, in the background is the RBI. And they've been obviously concerned about unsecured loans. They've been doing some regulatory kind of increases in what banks have to do, and NBFC. So I don't think they're leaving this alone. There's something that they're worried about, or they're seeing through data which we're not seeing at the moment. So I think the regulatory, plus if the other big banks or private banks don't deliver, then that could be a pressure for the banking in the very short term.
Okay, just in the pecking order of the preferences that you have from the banking space and of course the metal space, because that's something that we really haven't discussed in a bit. What's your order going to be like?
So I think, I still would look at the private banks. I think, let's see how the results are over the weekend, Nick. I think that's the key.
Sure, I get your preference there. You are preferring private sector banks, that's fine. But within the order, what do you like? Is it going to be Axis first, ICICI Bank second, SBI third? What's the kind of pecking order that we can look at?
Yeah, Nickey, my compliance always gives me a bit of a hard time on these things. But I would, if I could refrain and say, the top banks, the pecking order is usually kind of, the top four in terms of market cap, and it can switch around depending on the results. In terms of metals, there's only it's either aluminium or steel, so there's not too many companies to pick from there in terms of the large caps.
Okay, so within the metal space, is it ferrous or is it non-ferrous first?
I think it's both, actually, because I think once China does something in terms of firing, as I said, the big bazooka, I think the whole of the metal complex will move up. So I think that's the key. So it's all eyes on China to do this stimulus, and once it does, I think that's the extra tailwind that the sector will need to kind of see strong movements in share prices.
At the cost of repeating myself, I'm just going to again perhaps tap into understanding that what do you typically make out of the earnings that we've seen, at least from banking? That's one. And also, in terms of any other pockets per se that you're looking at, the neglected space, something like media also has done well. We've seen a bunch of these stocks doing extremely well. And I also remember, Andrew, the last conversation when we were having, I think it was somewhere in December, where you spoke about the Santa rally coming through for the market. It did, I mean, in the big way, to play out exactly in the way that you explained and perhaps were forecasting also. But what's your narrative right now? What do you think? You've spoken that maybe we're looking at some amount of pain coming in for the markets in the run-up to interim budget. When do you expect the pickup to happen? What kind of gains can we now be looking at?
So, Nickey, I mean, coming into the year after the Santa Claus rally, it was such a Goldilocks scenario. Interest rates were falling in the US. There's a 90% chance that interest rates would fall in March, or that was the expectation. That's now become 50-50. Inflation was falling. That's actually been kind of a little bit higher than expected. Same with the jobs data. So all of a sudden, a lot of that kind of extra kind of good feeling has been taken out of the market, and that's why you've seen global markets kind of underperform up until the last few days. Our markets again had that kind of same euphoria. The elections expected, for the same government would. So in terms of the policy making will continue. India, you hear Davos is top of everyone's mind. So that whole euphoria about India was there, and there was nothing to stop it moving higher. And we've seen what has. So I think once we get to those overbought levels, which we did, something usually comes out and just brings us back to reality. Now, in terms of how I would think about the market, as I said, earnings growth should rise by 15% this year, and I think the index will rise by a similar amount throughout 2024. In terms of the results so far, they've been pretty mixed. IT was better than expected. Banking, as we know, has not been a great start so far. And the other results again have been mixed. You get paid. Sorry, you make money by the companies that surprise on the earnings, and that's what you got to be looking for now is those companies which will continue to deliver. In these kind of this kind of environment that we're seeing. So I think I'm not so worried about the market longer term, or when say over this 1 year. I think short term we just got to be a little bit cautious, because I think we got a little too far ahead of ourselves in terms of everything working out perfectly, in terms of whether it's interest rates, global factors, our own factors. And some of these things are just not playing out as well as the market would hope.
All right, Andrew, we're just going to be leaving at that. But thank you so much for taking out the time and having this conversation with us.
Thank you again, Nickey.
All right. Also wanted to mark another few things here. We're looking at a special trading session coming in tomorrow. So that's one bit of update that I'd want to highlight essentially. It is a special trading session that we're looking at, and pull in the details of how we're looking at it. It's intraday. The special trading session will apply for equity and equity derivative segments. Intraday orders will not be allowed to place during the session. All securities, including those with derivative products, will have a maximum price band of 5%. Securities already in a 2% or lower price band will maintain their respective bands. A 5% price band will apply to all the close-ended mutual funds, and all future contracts will have a daily operating range of 5%. There may be a lot of volatility in the said trading session, and investors are requested, or rather the traders are requested, to exercise due diligence before placing in any orders. So that's a bit of caution there. But in terms of stocks that we need to otherwise pull up and mark, of course, RIL, we've spoken about that. Stocks in news, where RIL is going to be a big one that we're going to be looking at. It's going to be reporting in the numbers and set the tone, at least for the earnings season right straight ahead. It's been a mixed bag thus far, where IT has managed to outperform, and a bit of disappointment which has crept in from the financial space, HDFC Bank to be precise. So Q3 revenue projection, RIL expects a 2.29 lakh crore uptick, growth. I mean, the number there, the uptick is to an extent of 6%. EBITDA is up by 14%. At least the analyst poll suggests a 14% uptick there. And net profits are also estimated to be higher by 7% In terms of what we have for the other stocks in news, NHPC has typically opted to exercise the oversubscription option, and this represents nearly 1% stake in NHPC. The initial size offer was at 251.3 crore shares, and after subscription, of course, the total offer now will constitute to an extent of 3.50% of NHPC. We're looking at gains of nearly 1% thereabouts for NHPC. IndusInd Bank, well, it at least opened in red. Needs to be seen if it has recovered some amount of lost ground. It is NIMs at least have been steady, which is a great positive surprise which is coming from IndusInd Bank. The slippages, however, have risen to an extent sequentially and are elevated in Q3. The NIMs have come in at 8.5 year or more high. There is a 7th quarter of loan growth which is outpacing the deposit growth per se for IndusInd Bank. Really aren't seeing much amount of recovery there. Polycab is another one. Well, after this sharp sell-off that we've seen in a couple of days, at least with the amount of investigation reports that were suggested and the income tax audits, perhaps a bit of concerns which flagged off that there could be a potential of the corporate governance. The company is yet to come out and give any kind of clarification. It's denied the claims thus far, but some amount of correction even witnessed for Polycab. The revenue is up by 17%, operational performance is up by 13%, and PAT is almost higher by 15% or thereabouts. But that's all that we have in this edition. With this, it's a wrap, and goodbye from the entire team who puts this piece together. Thank you so much for watching, and please do post your feedback for us in the comment section below. Follow us in the link at the bottom of your screen, and for rest of the updates, stay tuned into moneycontrol.com and Moneycontrol app.